The phrase, the greatest thing since sliced bread, is often used to describe great new inventions, or even just the most recent new thing. But did you know that just like Bitcoin, the US government once tried to ban it?
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, Buenos Dias, Morgen, and welcome to episode 212 of the Bitcoin Bulletin Podcast. This story that I alluded to in the introduction isn't exactly Bitcoin related, but I wanted to relate it to you because I found it fascinating, and because governments often try and ban new things. You know, they tried to ban the automobile by passing all kinds of ridiculous red flag laws, etc. And this isn't exactly that kind of thing, but I just found it interesting as a short allegory, a short anecdote that I thought kind of has a little bit to do with Bitcoin. And that is a story that was at historyfacts.com the other day. And it was about the time the US government tried to ban sliced bread. The story says, sliced bread was first sold commercially in 1928 and quickly grew into a culinary sensation, until its rise came to an abrupt halt when it was briefly banned 15 years later. On January 18, 1943, amid World War II, U.S. Secretary of Agriculture Claude R. Wickard announced a ban on selling sliced bread in an effort to conserve wartime resources. The government hoped this ban would preserve the country's supply of alloyed steel, used to make slicing machines, and wax paper, used both to wrap sliced bread, which required thicker wrapping than unsliced loaves, as well as protect military equipment from the elements. It was a common practice to ask Americans back home to ration goods in the name of the war effort, but the ban on sliced bread was met with furious and immediate backlash. U.S. housewives in particular were dismayed over the ban. One woman named Sue Forrester wrote to the New York Times, quote, "I should like to let you know how important sliced bread is to the morale and saneness of a household. While hotels and restaurants were given a 60-day grace period to prepare, bakeries weren't so lucky and saw sales decline up to 10% while facing sizable fines for defying the ban. Given the ration's widespread unpopularity, many government bureaucrats played dumb and refused to admit being involved, pointing fingers at one another instead. Wickard finally rescinded the ban on sliced bread on March 8, 1943, claiming, quote, the savings are not as much as we expected, while conveniently neglecting to acknowledge any public outcry." So the moral of the story is that governments make stupid decisions all of the time, sometimes based on good intentions and sometimes just out of purely bureaucratic control freak tendencies. But when something comes along that radically improves people's lives, it is an unstoppable force. It's kind of the whole, first they fight you and then you win kind of scenario. And while banning bread for the quote-unquote war effort is a little bit different than banning Bitcoin or attempts to ban Bitcoin because of protecting the public, it is similar in some ways because we've heard that whole Bitcoin wastes electricity. So we certainly have the whole rationing electricity morale excuse for the attempts at Bitcoin bans, when we know the real reason that governments were attempting to ban Bitcoin wallets, development, etc., was because they were trying to protect their ability to print money out of thin air. So I just found that amusing and thought, that the more things change, the more they stay the same, that human nature, the nature of governments, and this was solidly in the fiat era after the 1913 founding of the Federal Reserve here in the United States, that just seemed like something that I wanted to relate today. We do have a lot of actual Bitcoin news to talk about, but of course, before we do get into all of that, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 892,754. And while people have been lamenting the Bitcoin price, it is actually up more than $1,000 since last DCA Wednesday, coming in at 84,040 US dollars right now. And of course, because it is more than $1,000 higher than it was last DCA Wednesday, that means we're going to get fewer Satoshis. In fact, every paper fiat dollar that you convert into Bitcoin right now will only net you 1,190 sats per dollar. Obviously, when we go back above that 100,000 US dollar per Bitcoin mark, we will be stacking fewer than 1,000 Satoshis per dollar. So stack as furiously as you can while you can at this discounted price. That's my humble opinion anyway, not necessarily financial advice, certainly not financial advice, period. But it is logic that if you're trying to stack as sizable of a stack as you can, you want to stack while the stacking's good. And I think that personally, anytime we see Bitcoin at less than $100,000, well, anytime Bitcoin's under the previous all-time high, which was a little over 109,000, that it's on sale. And I don't believe that 109,000 is going to be the cycle's high. I think it's going to go a lot higher. I don't have a crystal ball. I don't know exactly how high, but I would not be surprised to see Bitcoin more than $200,000 before it's all said and done later this fall. Bitcoin's current price gives it a market capitalization of 1.67 trillion, up from 1.64 trillion last DCA Wednesday. So again, just zooming out, Bitcoin continues its recovery from what did we see, a low of 1.64 trillion in the pullback when we saw Bitcoin retrace by not quite 30%. Which is amusing because a lot of the noobs and even some of the people that have been around for at least one cycle were screaming that the sky has fallen, that this halving cycle is over, that the top is already in. And I like to remind you that during a normal bull run, during a normal halving cycle bull run, Bitcoin has 5 to 7 pullbacks in excess of 30%. In fact, I think we had 3 or 4 38% pullbacks or greater in the 2017 halving cycle, which is what I like to compare this cycle to, at least. That's the feeling that I get in my bones. And if that's the case, man, a 29.9% pullback, not even a 30% pullback, is nothing. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 25.3 ounces of gold to purchase just one Bitcoin. And that's even with gold setting new all-time record highs, as they're having a little bit of a bump as gold tries to price in inflation and all the market shenanigans that are going on currently. But speaking of gold, there was an interesting headline at galaxy.com or dailygalaxy.com where they were announcing that a certain type of mycelium has been shown to eat gold, something previously thought scientifically impossible. You scroll down a bit into the article, and this is where it really gets interesting as far as gold is concerned, and as far as the scarcity of gold is concerned. The article says, what makes this discovery even more exciting is the potential application in space exploration. Companies are already exploring the possibility of sending microorganisms, including fungi, into space to process ores directly on asteroids and other celestial bodies. This approach, known as metabolic mineralogy, could change the game for space mining. It aims to address the challenges posed by traditional mining techniques, which are ill-suited to the harsh conditions of space. By sending modified fungi to space, it may be possible to extract metals such as gold from asteroids without the need for heavy machinery or complex equipment. The concept of using fungi in space mining could significantly simplify resource extraction from space, offering a promising solution to one of the key challenges of space exploration: how to obtain valuable materials at a cost-effective and sustainable manner. The article also talks about using this fungi, using this mycelium on Earth as well, because it's simply a matter of scattering the mycelium, and where the mycelium starts to turn gold, you have gold deposits there. So instead of having to drill numerous test mines in the search for gold, that they're looking at simplifying using this fungus to simplify gold exploration on Earth. But the real kicker here is we know there are tremendous gold deposits on asteroids out there zooming around space. One that's coming towards Earth that I spoke about in previous episodes, that there are probes being sent to test for and confirm the presence of gold. And if that is the case, follow-on probes will be sent to try and extract the gold. And they already think that with SpaceX launching into space cheaper than it historically has been, that it was already going to be feasible. But with this article, what they're saying is if they go up in advance and instead of sending a mining probe, they send a probe that sprinkles this mycelium on the asteroid, and then the asteroid digests all this gold, basically turning itself into gold, or, loading up on the gold, filling its guts full of gold, like it's munching away on the gold, and then extracting it for us. And then all they have to do is just go scoop up the mycelium and return it. That's pretty amazing. So the point being that we know that there's a basically limitless amount of gold in the universe, even just in the solar system. But that extracting it was the kicker. And as the technology, and it looks like it's getting even more potentially practical with this discovery of this mycelium, this gold-eating mycelium, that one day gold mining in space, asteroid mining, will dramatically expand the gold supply, of course, completely destroying its monetary premium. That gold would be so common that it would be used only basically to look pretty and to plate sensitive electronics, etc., but that it would lose that financialization, the monetization, the monetary premium that makes gold so valuable and has made gold valuable for all of the history of humanity. That's potentially on the precipice of going away. And one thing that you can never use mushrooms to create more of is Bitcoin, of course, with its hard cap at 21 million, or just under 21 million to be exact. That is something that will never change, regardless of what new mining techniques we develop or what new fungus that we might discover. So I found that quite interesting. That I already anticipate that space mining was going to demonetize gold, even if Bitcoin didn't. Sooner rather than later, and this is potentially a way that will happen even sooner than I had expected. All right, for those of you who value your wealth in pizza, at the current price of Bitcoin, one Bitcoin will purchase you 4,700 large pepperoni pizzas from Papa John's, almost 100 more pizzas than just last Wednesday. At this current valuation, that's one pizza a day every day for just under 13 years. And that is a heck of a lot of pizza, as pizza trends to zero in Bitcoin terms. And that metric that has been my favorite metric for the majority of this podcast, Bitcoin's 24-hour average transaction rate, is absolutely screaming, currently averaging 6.04 transactions per second, not quite double last DCA Wednesday, and true to form, when the transaction rate of Bitcoin is up, the price of Bitcoin tends to be up as well. Something I find absolutely fascinating, because as I've spoken about in length almost every episode for the last 4 years now, you would assume that when Bitcoin is crashing, that the transaction rate would be up as well, as people move Bitcoin to exchanges to sell it and Bitcoin gets passed around. But just from an observational standpoint, every Wednesday when we've been doing this podcast, whenever we have seen transaction volume surging, so has the price of Bitcoin. And that is not any kind of official TA, but something that continues to still be the case, and something that's just fun to note. Speaking of all of this on-chain activity, with on-chain activity surging, the mempools have been swelling as well. Nowhere near as clogged as they were just a few months ago, but Clark Moody's dashboard now has 14,204 transactions pending in it at this very moment. And that was only 2,240 transactions last DCA Wednesday, so a significant increase. Mempool.space telling an almost identical story with 14,201 transactions pending in their mempool, up from 2,272 last DCA Wednesday. And of course, with all these transactions pending in the mempools, the cost to the miner fee to send an on-chain transaction is up as well. Mempool.space is recommending a high priority transaction include a fee of 3 sats per VByte, up from 2 sats per VByte last week, although they are saying that 1 sat per VByte fees will be mined within a day. And that is, of course, the lowest fee they recommend, even for a low or no priority transaction that you're willing to wait up to a week to confirm. Mempool.space is saying that a high priority transaction should include a fee of 4 sats per VByte. That is 4 times more than last DCA Wednesday, and it works out to about 47 cents in US dollar terms, just under 4x what they were recommending last DCA Wednesday. With the price of Bitcoin being a little more expensive, you would expect that to be exactly 4x, but nonetheless, it is almost 4x what they recommended last DCA Wednesday. Now, unlike Clark Moody, they're saying even a medium priority transaction should include a 4 sat per VByte fee, and that a low priority transaction still needs a 3 sat per VByte fee, and even a no priority transaction that you're willing to wait a week or so for confirmation on would require a 2 sat per VByte fee. So double where we were last DCA Wednesday, even for a no priority transaction. Maybe that'll clear out by the time we roll into the weekend again. Mempools often tend to clear, but if you were waiting on consolidating some of those UTXOs, certainly I would expect that when we get into the euphoria phase of this bull run, maybe this summer or this fall, we're going to see those fees spike again. So if you don't want to get caught not being able to spend some of your smaller UTXOs, or to even move some of those smaller UTXOs to a different security setup, or if you have some Lightning channels you've been thinking about opening or closing, pay close attention to those fees, because high fees are coming again sooner rather than later. Even if we see 1 sat per VByte here, maybe in a few days, when we see increased Bitcoin adoption, it's a kind of a no-brainer that you're going to see an increase in mining fees as well. And even if you are going to use Lightning for your smaller dollar value transactions, unless you're using custodial Lightning, if you're running your own Lightning node, that means you need to manage your channels, and managing channels are on-chain transactions. So even running your own Lightning node, it's going to get more expensive. So while fees are cheap, that is something you need to consider. We are just a few days, just looks like a little more than 2 days away from Bitcoin's next mining difficulty adjustment. As you know, Bitcoin mining difficulty is adjusted every 2016 blocks, which works out to about once every 2 weeks, with the goal of having transactions come in at an average of 10 minutes between blocks. When they're coming in too slow, that difficulty is relaxed. When they're coming in faster, the difficulty is increased. And since, just like the price of Bitcoin, the hash rate securing the network is also up and to the right in general, if you zoom out, more often than not, we see difficulty increases. We have had 1 or 2 small difficulty decreases. I think four difficulty adjustments ago was a 3.2% difficulty increase, but in general, they tend to be difficulty increases. The last adjustment was an increase of 6.8%. Last DCA Wednesday, the different sources I was looking at, both were estimating modest difficulty decreases. I said I wouldn't hold my breath on that because we still had quite a ways to go, and that the overall trend being an increase in difficulty, that perhaps we should expect at least a modest increase, not a decrease. Currently, that is definitely looking like it's going to be the case, because the 2 sources I'm looking at are both forecasting reasonably sizable increases. The low range looking like maybe a 2.0% difficulty increase, and the highest source I'm looking at being a 4.3% difficulty increase. And that is because blocks are currently zooming in with a halving epoch average so far of 9 minutes and 48 seconds between blocks, obviously faster than 10 minutes, significantly faster than 10 minutes. And that is because the network hash rate has continued to increase. I like to look at the 90-day average statistic, because really this is just a guess based on block speed. So just like the mining difficulty increase takes 2016 blocks, I think the 90-day average is a much more conservative estimate, but even that is showing that we're now looking at 822.8 exahashes securing the Bitcoin network. That is more than 10 exahash greater than last DCA Wednesday, a significant increase, considering that we've seen just maybe a 2 to 10 exahash increases in the past. 10 being the larger size, 2 being on average what we would expect to see week over week. So greater than a 10 exahash increase is certainly significant. Of course, that doesn't necessarily mean that there's more Bitcoin miners mining to secure the network. That is, of course, the case, but also it means that, as mining profitability has gotten tougher and tougher and tighter, a lot of those older Antminers, the Antminer S7s and the Antminer S9s, and now the Antminer S19s have been retired and replaced with Antminers, with miners in general that are more powerful, more efficient. And so even with, the old miners being retired, the newer miners are radically more powerful than the older miners. I think the Antminer S7, which was the first ASIC that I was really familiar with, had about a 1 terahash mining power, and then the Antminer S9 was basically 10x of that. I think some of the Antminer S7s, there was a series where it was maybe as much as 4.5 terahash, and then the S9s came out and they averaged between 10 and 14 terahash, and then the S19s were greater than 100 terahash, and you get the point. Just like the price of Bitcoin goes up, the computing power has increased, and the power of those computers, or those ASICs in this case, has increased as well. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. And of course, when you send a boost, when we receive boosts, we do read them on the next episode. We don't have any boosts to read this week, but you should be listening via Podcasting 2.0, such as Fountain, even if you don't contribute value back, because Fountain, for example, allows you to earn a few Satoshis here and there once a day for listening to your favorite podcast. So even if you don't have any sats to contribute back to your favorite podcast, you don't want to miss out on free sats, right? Fountain is not a sponsor of the podcast, but I listen to every podcast I listen to on Fountain because, well, just like we don't like big pharma and we don't like big tech, you shouldn't like big podcasts. Why should you sell your data, your private information to Spotify when you can be using open source solutions and solutions that allow you to contribute back, such as Fountain or Breeze. Speaking of our listeners, our geographic distributional listeners has had a minor change since last DCA Wednesday, a little bit of a change. Our top 10 countries for listenership are as follows. Number 1 remains the United States, where more than half of you are listening. So thank you to my fellow Americans, regardless of where in this big country you're listening from. Number 2 remains Singapore, although I think they've solidified their number 2 position by about 1%, making up 1% more of our listenership than previously. So apa kabar, thank you to those of you who are listening in Singapore in ever-increasing numbers. Number 3 remains Germany, where they have held a solid position for many, many months. So Dankeschön, mein Freunds in Deutschland. Number 4 remains Argentina. So hola, muchas gracias amigos in Argentina. Number 5 remains Luxembourg. Again, Dankeschön, mein Freunds in Luxembourg, or Morien to those of you who speak Luxembourgish. Number 6 remains Canada, so thank you to those of you north of the United States. Number 7 remains our cousins across the pond in the United Kingdom, so hello and thank you to all of you listening in the UK. And here's where we get into our change. Spain has moved up 1 notch to number 8, displacing Australia. So hola, muchas gracias amigos in Spain. It's good to know that more of you are listening than ever before, so thank you for listening in numbers sufficient enough to bump you up to the number 8 country by listenership. Number 9 now is Australia, sinking 1 spot, but still ringing in with about the same number of listeners as the last few weeks. So hello and thank you to those of you listening down under. Rounding out the top 10 is Mexico. So hola, muchas gracias amigos in Mexico. And of course, we have listeners in many, many, many other countries, almost any country I can think of. But we only read the top 10. So thank you to all of you, regardless of where you're listening from. It is you listening to this podcast that makes it all worth it. On to the news. Of course, the news recently, anytime we're either in a bull run or a bear market, it seems like the price dominates the news. And right now, what is dominating Bitcoin price is the TradFi news, the traditional markets, and the traditional markets are acting like a bunch of drama queens. Of course, the stock markets have been whipsawing higher and lower every time somebody says anything about tariffs or inflation or the Federal Reserve or interest rates. And that is the case today with markets down, depending on what index you're looking at, anywhere from 1 to 3%. And the accompanying headlines, like on Yahoo Finance, quote, stocks routed as tariff fears return to Wall Street. Powell warned of challenging scenario for the Fed. NVIDIA led a tech sell-off after being caught in trade war crossfire. And of course, by routed, they mean 2%. Today, for example, the Dow closed down 1.73%, so not even 2%. And could you imagine people absolutely losing their shit over a 2% day in Bitcoin? But even in TradFi land, 2% doesn't make a market crash. You know, the Black Monday that people like to talk about in 1987, the Dow fell more than 22% in a single day and kept going from there. So don't even get me started about Bitcoin volatility. 2% is no big deal, even in the stock markets. But people have become so used to number go up in the stock market with stocks, companies, valuations like over 100 with PEs of over 100 to 1 recently. As you know, we've lived many new investors, millennials, never knowing anything other than a quantitative easing environment with the money printer go burr and a lot of that money pouring into stocks and equities, and the price just seemingly going up forever. But just like anything else, the price of stocks fluctuate, and today they fluctuated 2%. Many people, even Elon Musk himself, have said that his stock, for example, is excruciatingly overvalued with all that paper money pouring into the markets. But on the flip side, I want to remind you that I've said a couple of times now, at least on one episode I got into, where I have successfully orange-pilled normies on days like today. I have taken advantage of days just like this to point out that that normies, that boomers, people in the TradFi mindset have quote unquote lost 1.7% of their portfolio's paper value today. If they were all in on Dow stocks, for example, even more if they were all in on NASDAQ stocks. So what I've done is I pointed out that, hey, you know, if you invest just 1% of your savings, 1% of your investment money into Bitcoin, Bitcoin would have to go to zero for them to realize the same quote unquote loss that they realize today. In fact, if your portfolio was just 1% Bitcoin and it was the rest of it was in Dow stocks, you lost 1.7% of that paper gain today, one of your paper value today. And if Bitcoin completely went to zero, the most you could lose was 1%. Of course, I don't expect Bitcoin to go to zero. I think that every day that Bitcoin hasn't gone to zero, that possibility has become more and more minuscule. There are people like me, I think Cedric Youngelman has said it recently multiple times during this podcast that that if Bitcoin got anywhere near zero, let's say Bitcoin dropped all the way to $1 per Bitcoin, I know there's plenty of people out there who would buy every Bitcoin that's for sale. So the possibility of Bitcoin going to zero would be unfathomable to me. Never say never, of course. The chances of almost anything are never zero, but Bitcoin would have to go to zero for someone who has just 1% of their normal investments in to lose the kind of money that they lost just on a day like today in the regular market. Anyway, that's one method that I've used to successfully orange pill boomer and even older relatives of mine, just by comparing their actual paper loss that they just suffered on any given Wednesday in TradFi as a way of putting those sort of things into perspective. Speaking of perspective, and this is something I've said over and over again every week since Bitcoin has been down from its new all-time high, but Ben Workman at Ben Workman on Twitter or X tweeted last week, I think it was, but it was as true then as it is today. There were a lot of people losing hope at achieving Bitcoin whole coiner status. The markets are giving you the gift of more time to accumulate at lower prices. Don't let uncertainty cloud your ability to execute towards your goals. You have no idea how long this turmoil will last, so make the best use of it you can. Again, Ben not saying anything that I haven't said on many, many episodes. It's just good to know I'm not the only one out there saying it. Logically, obviously, I wasn't. But I wanted to highlight one other person, somebody with a way bigger following than I have, who is saying the exact same thing. Speaking of increased accumulation, Metaplanet, yesterday, 2 days ago now, announced on Twitter that they were issuing $10 million in additional 0% ordinary bonds with the goal of purchasing additional Bitcoin. As of April 14th, Metaplanet held 4,525 Bitcoin worth an estimated or an approximately 386.3 million US dollars, with their average price at 85,366 per Bitcoin. So they were underwater a little bit on their Bitcoin investment so far, but of course, that happens to a lot of people your first cycle. And by purchasing an additional $10 million of the Bitcoin, they could drop that average purchase price, especially if they've done so already when Bitcoin was maybe even in the $70,000 ranges. But either way, I spoke about how this was going to be the first cycle that vindicated El Salvador. This was going to be the cycle that vindicated Michael Saylor. When you purchase Bitcoin, whether you're an individual, a country, or a company, the price is volatile. So there might be times that it costs more than what you purchased, and there's going to be times when it looks like you have huge gains, and then we shoot all the way up to that blow off top where it looks like you're a financial genius, and then Bitcoin has that bear market or the crypto winter where you might be underwater again, but that this is a long-term goal thing. Like Adam Meister's 210,000 block theory says, if you take the price of Bitcoin on any given day and go back 210,000 blocks, which is approximately 4 years, one halving cycle, Bitcoin is always worth more now than it was 210,000 blocks ago. So 4 years from now, even if Metaplanet is upside down $1,000 for Bitcoin right now, they're going to be way up when Bitcoin sets whatever that cycle's new all-time high is. Then the cycle after that, the new cycle all-time high would be even higher until we break out of the cycles altogether, and Bitcoin just keeps going to where we have hyper-Bitcoinization, and then 85,366 per coin will look like they got in at an unfairly low price, that they didn't earn that they just got lucky. And speaking of people falling down the rabbit hole, it looks like President Donald Trump is getting closer to getting it as he is exposed to the Bitcoin rabbit hole. The thing about Bitcoin is, regardless of what your preconceived notions are, Bitcoin changes you. You get exposed to Bitcoin, you buy your first Bitcoin, you start doing a little more research, you fall down that rabbit hole, and you get it just a little more and a little more as you study, as you fall further down that rabbit hole, till eventually you're that rabid cyber hornet Bitcoin maxi that we like to assume Michael Saylor is, for example. So Unusual Whales pointed out a couple of days ago, they posted a clip of Donald Trump saying, our country was the strongest, believe it or not, from 1870 to 1913. You know why? It was all tariff-based. We had no income tax. And you know what we also didn't have, Donald Trump? We didn't have the Federal Reserve. But for him to realize that, for him to put two and two together, that back in the day, before we had the income tax, before we had the Federal Reserve, the US dollar and the country was the strongest because we were on a gold standard. We didn't play fiat games yet. And that is just, to me, that's a sign that he's on that journey. I think when people, whether you're the president of the United States or whether you're just an average Joe, when people first get into Bitcoin, now especially, maybe back in the day on the forums when Bitcoin was brand new and it was just coders, cypherpunks that were into Bitcoin, the like Andreas Antonopoulos, the brilliance of the code is what they first fell in love with. But for most people, it's the dollar signs in their eyes. It's the ability to make a quick fiat gain, giant fiat gains, outsized fiat gains to the moon that most people, that attracts most people to Bitcoin. And then, of course, once they buy Bitcoin, they start to do that research because it's in your best interest to know as much as you can about something like Bitcoin that at the time was a brand new asset and is still relatively new, being only a teenager. But the point being, as you learn more, you fall down that rabbit hole, it changes you, you become that raving psychotic, that Bitcoin maxi, that cyber hornet that's obsessed with Bitcoin, that won't shut up about Bitcoin as far as all your normie friends or maybe your significant other are concerned. And it's inevitable that that'll happen to Donald Trump as well. He has gotten off a zero, and he can only, if he can only, I mean, he's old. You can't teach an old dog new tricks, as they say, but even Donald Trump, I think, is coming along. And this is just a sign to me that he's starting to get it. He's already talking about prior to 1913. So it's only a matter of time before he also finds out about that creature from Jekyll Island as well. Speaking of Donald Trump, was just Thursday, President Trump signed the bill repealing the crypto broker rule. And if you don't know what the crypto broker rule is, that was a IRS ruling that said that that basically reporting requirements applied to anybody who was involved in as in a broker or even facilitating brokers. And this could have been interpreted as even just wallets, and wallet writers would require to know the social security number, the identifying information of everybody that uses that wallet that passes Bitcoin back and forth. Anyway, it was a quagmire. It was unenforceable because it was uncompliable. I mean, you couldn't comply with it. It was so ridiculous. So it was nice to see that Congress recognized that they passed a bill to repeal it, and that President Trump signed that into law last week. So totally night and day from where we were just a couple of months ago with the previous administration that was fully engaged in going after Bitcoin developers, after Bitcoin companies, prosecuting people for writing open source software, for just writing code. It's a good thing that this is 180 degrees the opposite direction of where this country had been heading, and out of step with where Europe looks like they're currently heading. So who is not getting closer? We spoke about Donald Trump getting closer to falling down that rabbit hole, further down the rabbit hole in his Bitcoin journey. Who is not getting closer in this country is the radical left, that thank God is no longer in power in this country. Because while the current administration is becoming more and more Bitcoin and quote unquote crypto friendly by the day, Democrats in this country are continuing to attack Bitcoin, with Blockchain Daily News reporting on April 13th, just in, Democratic senators at Senator Whitehouse and at Senator Fetterman introduced the Clean Cloud Act targeting emissions from crypto mining and AI data centers. At Senator Whitehouse being Senator Sheldon Whitehouse of Rhode Island, and of course John Fetterman from Pennsylvania, introducing the bill which says right in it that its purpose is, quote, to amend the Clean Air Act to establish requirements on the collection of electricity consumption data and emission standards for servers and other acute computing equipment used for cryptocurrency mining and for other purposes. So the headline mentions AI data centers, but the bill itself specifically says cryptocurrency mining and other purposes, doesn't say AI data centers. So you know where we're going with this. Exactly the shenanigans that the New York Democrat-controlled legislature and governor have passed in their state, along with other ridiculous regulations like the bit license, completely driving Bitcoin innovation out of New York State, and completely par for the course with what you could have expected had the Democrats taken control of the Senate and the House and the presidency in this last election. Completely night and day from where we find ourselves right now, with even people that think Donald Trump is a clown, that think he's an idiot, a buffoon, that he's just accidentally lucking into the right policies. And if that's the case, fine, at least he's doing the right thing. Maybe he's out for himself. Maybe he's a shitcoiner, but he's not Elizabeth Warren. He's not building an anti-crypto army. He's not throwing developers in prison. He's promising to cut the IRS. He's signing a bill reining the IRS in from trying to go after wallet developers and exchanges, as this was an example with the broker rule that was just signed into law that we just spoke about. So that's all the news I have to talk about this week. I know there's probably a lot more that people are concerned about, but I've been trying to keep this a short episode because I have another pressing issue that's knocking on the door right now that I need to get onto. But before we get on to our DCA Wednesday segment, I did want to mention, and this has something to do with DCA, that when we do our DCA series, for the entire history of this podcast, as you know, I've been stacking using Cash App, because Cash App already had some of the highest fees in the business, charging 2.25% to do a Bitcoin transaction, where, for example, on Coinbase, you can get a transaction for under a single percent. But But there were other reasons that I liked Cash App. Just the ease, the fact that they would let me transfer money from my debit card into Cash App, immediately convert it to Bitcoin, and immediately transfer it to my hardware wallet, and to do so without a mining fee that kind of helped offset some of those higher purchasing fees. But apparently, that is coming to an end May 1st, with Cash App notifying their users that they are going to be dramatically increasing their fees, basically doubling them. Right now, for example, when we make our purchase today, we're going to pay about 45 cents in fees. But starting May 1st, any transaction between $10 and $25 is going to incur a 99-cent fee. So basically, more than double the 45 cents that we are currently paying. And if you do smaller transactions, for example, even a $1 transaction, they're going to charge you a 25-cent fee. So 25% of the dollar if you make a $1 purchase. And that's excuse my French, that is completely outrageous. So it looks like I'm going to be having to stack via another method. Now, in order to get down into the range of Coinbase and the other professional brokerages, you're going to have to stack more than $5,000, because their cheapest fees start at $5,000.01. And even then, that's 0.75%. And I think the cheaper fees on many other brokerages are about 0.1% when you're talking that price range. So I'm going to be exploring River, and I already use Strike from time to time. The thing that I didn't like about Strike is they charge lesser fees, but they charge you like 2% to transfer money to Strike via a debit card. So right out of the bat, it didn't matter what their fee is. We were already paying more just to get the money into Strike. Every exchange has their pros and their cons. This is one of those reasons I say this is a you do you thing. When I talk about Cash App, of course, they're not a sponsor of the show, but when you choose whether you're going to use Cash App, Coinbase, Gemini, Strike, River, whatever you're going to use, Bull Bitcoin if you're in Canada or Mexico now, apparently, all that really matters is that you don't use some fly-by-night shady exchange that nobody's ever heard of, not some weird exchange you found on a Reddit or Bitcoin forum, or that some guy just told you about it. You got a random text from a stranger that you don't even know told you about. Because if you use a reputable exchange and you then immediately transfer your Bitcoin to your cold storage, it doesn't matter if they're like SBF and FTX and that they're a time bomb that's waiting to go off, that they're just one day away from bankruptcy. As long as they're in business for the 30 seconds it takes you to make that transaction and the minute or two it takes you to get that Bitcoin off the exchange, you should be fine. Unless you have the ultimate bad luck and you make that purchase seconds before they send out the email saying they're freezing withdrawals, you should be good. But again, those are you do you things. Make sure you know what exchanges are available to you in your jurisdiction, whatever country you're listening from, and then compare. All of them are going to charge some sort of fee. They have to make a profit. So usually, if they don't charge a fee, they're charging a spread, which means if you look at the Bitcoin price that they're selling Bitcoin to you for, it may be a couple $100 a Bitcoin more than what the fair market value of Bitcoin actually is. Sometimes exchanges use both a fee and a spread, so it can be even harder to determine whether or not you're getting a good deal. But most of the larger exchanges are pretty reputable, and Cash App is too. But the fact that they're trying to double their fees is really, really frustrating, because they already make their bread and butter off of Bitcoin sales. Cash App's making hundreds of millions of dollars off of selling Bitcoin. They don't need to double their fees, especially when their founder, their CEO, Jack Dorsey, is supposedly such a rabid supporter of open markets and of Bitcoin. Something that I think this calls into question. I've also already been wondering why, he's been promising for years now that his Square, which is what most of the small businesses use, and the majority of small businesses in the country uses their credit card processing as their cash register, is a Square terminal. And he's been promising that he was going to make, Bitcoin available for merchants to accept his payment, quote unquote, soon, like 3 years ago. And that should be relatively easy since he also owns Cash App and he'll sell you Bitcoin. He'll sell me Bitcoin. Little things that are making me start to question Jack Dorsey's loyalty to Bitcoin and his business practices. But again, that's another tangent. On to the reason we're here this Wednesday and every Wednesday, and that is because Wednesday is dollar cost average Wednesdays. And if you're just joining us for the first time or don't know what dollar cost averaging is, DCA, or dollar cost averaging, is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, we set our equal portion at just 20 US dollars, and we chose our regular interval as weekly on Wednesdays. Again, these are you do you things. I chose $20 because I wanted it to be an amount that was small enough that the average person listening to this podcast could come up with at least that amount. And weekly, well, that's just a good interval for podcasts, but in the United States, most people I know get paid weekly or maybe bi-weekly on Fridays. So once a week or once every other week is usually when most people would do their investing, regardless of what they're investing in, because that's when they get their paycheck. So weekly seemed like a reasonable interval for us. And of course, those are you do you things. If you get paid as on a gig basis, maybe you do your investing just whenever you have money. But again, those are you do you things. The important thing is that you take an equal amount of money and you invest it at a set fixed interval, regardless of price, that you're not trying to time the market. You're not trying to buy and sell. You're not gambling. You're not trying to trade the market. As they say, time in the markets beats timing the markets every time it's tried. And in the almost 4 years we've been doing this now, we have certainly proven that, at least in our case, that if we had YOLO'd in on the very first Bitcoin Bulletin podcast, we would have bought at a higher price than what we've achieved by dollar cost averaging. So this is going to be our 195th DCA Wednesday. We did start all the way back on July 28th, 2021. And in the ensuing 194 Wednesdays, we've converted a total of 3,880 US dollars at just $20 a time. It does add up fast. That's the other thing I wanted to show. But we've converted that into a stack of 10,571,491 sats. And we've done so at an average purchase price of $36,702.49, significantly less than half of what Bitcoin's current US dollar price is. So probably for the last DCA Wednesday now, we're going to use the Cash App to make our stack because they haven't passed along that price increase yet, and I already have money on Cash App. So it's just a matter of me opening it up, tapping on Bitcoin, tapping buy, entering $20, tapping confirm, and boom! We have stacked another 23,192 sats. Bitcoin got a little more expensive while I was talking. It was just over 84,000. It was like 84,010. What did I say it was? 84,040, I think is what I said it was when we first started reading the stats. We purchased at a price of 84,295 US dollars. Of course, because of there's that fee, our effective price was actually about $86,000. But I digress. Those 23,192 sats bring our total stack now up to 10,594,683 sats. It does increase our average purchase price by a little over $108. Our average purchase price, our average cost basis now is $36,810.92. Still significantly less than half of what we just paid for the Bitcoin we just purchased. Perhaps as importantly, when one Bitcoin returns to 100,000 US dollars, which I believe will happen sooner rather than later, and of course I think it'll blow way past that when we finally do hit the euphoria phase of this bull run. But at $100,000 per Bitcoin, our stack, without stacking a single extra Satoshi, will have a US dollar value of $10,594.68. Considering we have just now stacked, this $20 brought our total up to 3,900 US dollars. So less than 4,000, we have a stack of Bitcoin that will be worth $10,594.68. When Bitcoin hits 1 million US dollars, which I think is a matter of sooner rather than later, maybe not this cycle. If you asked me to guess 4 years ago, I would have said that maybe we'd hit 250,000 this cycle, and that after the 2028 halving, that's when I thought we'd hit 1 million. But I don't know. That's just a guess. You know, there are plenty of people who say that it will happen, including Samson Mao, that will happen this cycle. You know, it wouldn't be that hard for Bitcoin to hit 1 million this cycle. That's only 10x from 100,000. Bitcoin can 10x in a blink of an eye. It has 20x before. If we follow what the cycle did in 2017, and I just have the feeling that that's where we're headed. Bitcoin more than 20x'd in 2017 from its cycle low, going from less than $1,000 to almost 20,000 US dollars, in just the span of a couple of months. So if we see something like that, Bitcoin could easily hit $1 million this cycle. But when it eventually does, even if we don't do another purchase between now and then, our stack of Bitcoin would have a US dollar value of $105,946.83. A hell of a return for just 3,900 US dollars. And of course, Adam Back is famous for saying that he believes Bitcoin will hit 10 million by 2032. He was actually echoing something that Hal Finney had actually said even earlier, but Adam Back said it in 2022. Of course, if you don't know who Adam Back is, well, he's an OG. I mean, Satoshi cited Adam Back in the white paper for his work on Hashcash, which was the inspiration for Bitcoin's proof of work. So certainly, if there's someone out there who knows a thing or two about Bitcoin, Adam Back was a Bitcoiner before Bitcoin even existed. Anyway, he says that he believes Bitcoin will hit 10 million US dollars by 2032, easily within the realm of possibility, because even as I said, that's two halvings from now, two additional halvings from now. So you got the 2028 halving. If I said maybe that's the first time Bitcoin crosses 1 million, that would only be Bitcoin 10xing again at the next halving. So easily within the realm of possibility if it doesn't happen sooner. But the point is, when Bitcoin does hit 10 million, our stack of Satoshis, without stacking one more sat, without stacking a single extra time, will have a US dollar value of $1,059,468.30, an absolute mind-boggling return on just 3,900 US dollars. And of course, it gets better. Back in January 2022, Fidelity's director of global macro, Jurian Timmer, made the prediction that one Bitcoin will be worth $1 billion by 2038. Now, 2038's more than 10 years from now, but if Bitcoin does hit $1 billion by then, and it is completely conceivable that it will do so if we end up in a world where Bitcoin is if it's the new global financial reserve, if it replaces the US dollar, if we end up on that hyper Bitcoinization path, even if it's just what major companies use as their treasury reserve assets, if companies and countries are hoarding as many Satoshis as they could get, easily conceivable that Bitcoin hits $1 billion, maybe even sooner than 2038. I have no idea. I don't have a crystal ball, but if it does, that would be insane, because our current stack would have a US dollar value of $105,946,830, solidly cementing you as a Bitcoin OG, as one of those people that everybody says, wow, can you imagine? These people, man, they only converted $3,900. They invested $3,900 back in the 2020s, and now they've got $105 million worth of Bitcoin. Wow, don't you wish that you were that lucky? They will certainly be jealous, just like those teenagers who invested their bar mitzvah money or their Christmas money or their birthday money from their grandma back in the early 2010s, and turned that into $100 million of the Bitcoin when Bitcoin was only in the run up to $20,000, in 2017. But either way, it's safe to say that the current stack of Satoshis that we have, just by converting 20 US dollars a week for less than 4 years, just about 4 years now, it scored us that stack of 10 million sats. And you already know that if every Bitcoin if Bitcoin weren't lost, if there weren't people like Michael Saylor in the United States and people hoarding large amounts of Bitcoin, if there weren't whales, but if we took all 21 million Bitcoin and tried to divide it equally amongst all the people of the world, that you'd only be able to hopefully maybe accumulate 150 to 200,000 Satoshis in that scenario. And we already have 10 million sats, which puts us 100x. Our stack is 100x larger than the average person would ever be able to hope to accumulate, even without Bitcoin being lost, even without whales already hoarding the first 20 million of the 21 million Bitcoin that will ever be issued. All right. before I wrap up, as usual, I would like to ask you to share this episode with a friend or family member. Obviously, some of you are doing that, I'm assuming, because there are countries like Singapore, which are solidifying your ranking in the top 10, other countries like Spain moving back up in the top 10. But that is probably the single biggest thing you can do to both help this podcast by feeding that algorithm monster, which will help more people become exposed to the podcast, which will help maybe somebody you don't even know become orange pilled, somebody who's hopeless, that they think they're too late to Bitcoin or that they can't really ever achieve an appreciable stack of Satoshis with just $20 or $100 or whatever they have to convert into Bitcoin. And maybe by listening to this podcast, seeing that we've stacked more than 10 million sats by just stacking $20 a week, maybe you'll help orange pill somebody, but you'll also help promote this podcast. So by liking, by making sure that you rate or review this podcast or sharing this podcast, depending on what podcast platform you're listening to, you'll be doing us a tremendous favor, help support this podcast, and maybe help some friend, family member, even total stranger become orange pilled. Of course, you can also help feed that algorithm monster by making sure you're following us on Twitter and X, Twitter or X. And on X, we are at BTC Bulletin Pod, BTC like Bitcoin, Bulletin, Pod like Bitcoin Bulletin Podcast. Of course, I also love hearing from you. So if you do follow us on X, my DMs are open. I have my DMs open right now. I do answer the DMs unless you're the cute girl asking how my trading's going. Those bots that are all over. But if you don't use Twitter, you can also send me a good old-fashioned email. And my email address for the podcast is bitcoinbulletin@protonmail.com. That's bitcoinbulletin@protonmail.com. I also have my email open on this computer that I'm staring at right now, and I do respond on my emails. Of course, most importantly, don't forget to join us next Wednesday and every Wednesday as we continue our Bitcoin journey. But until that time, keep on stacking those sats, you sexy sat stackers.